What's up, YouTube? Mikkel Hayden here for another video. I'm excited. Today we're going to start a new series where every week we're going to review some finance news together. It'll be as much a learning experience for myself as well as hopefully helping you guys learn a few things as well. And let's just dive right into it. On the S&P 500, the biggest gains and biggest losses. This was posted September 28th, so a little over a week ago. But let's take a look at kind of what's going on in the market. There are quite a few companies that I don't know here. Trimble Inc., for example, and Albemarle. Not quite sure how to say that one. I looked them up. Trimble is a technology company, and the second one is a chemicals manufacturing company. One of the things it specializes in is lithium, I assume for lithium ion batteries. So, kind of in the same technology space in a way. And there's also quite a few other technology companies over here on the big winner list, I like to call it. If we look over on the big losses list, we're going to see CarMax there with a huge loss. Later on in the article, it does say this is likely due to their reported profits being much lower than anticipated, as well as just the rise in car prices and the cost of the potential loans, and losses on their loans that they have. So, taking another few looks at the losing side, we've got a couple energy companies. AES Corporation is an energy company, as well as Next Era Energy, obviously, and Dominion Energy. So a bunch of energy companies not doing great over here. Warner Brothers, Entertainment, Boeing, Travel. The only other thing that sticks out to me is Micron Technology. It's kind of weird to see a technology company not doing great. They're fairly known for their storage solutions for computing, but doesn't look like they're doing great. And if we look down, they don't say anything specific about that company, so I'm not quite sure why that would be. One of the key takeaways here, they say, is the S&P 500 has gone up 0.6% as of late, which is good overall. The market's going up. If you have money invested generally in the S&P 500, you'll be gaining returns. It's a small percentage, but over time, it's good. And then it mentions a couple other things, such as Accenture shares sinking as IT services and consulting company miss revenue estimates. And its guidance fell short as new bookings declined. I'm not totally sure what Accenture does, but it's never good to miss your revenue reports, profit reports. Any of those are going to tank stocks a little bit for any company. So you really want to look out if you're invested in one company or another. Maybe keep an eye on what their estimated profits are and then what they end up reporting. That might give you an idea of where their stock's going to go. All right, guys. Next up, we have this article titled Oil Prices Near $100 per Barrel Raise Question Over Demand Destruction. Some key takeaways from this article are demand upticks and supply cuts from heavyweight crude producers have driven prices near $100 a barrel. Some say buyers can weather the storm of high prices without lowering refinery output runs amid high refinery margins. I'm not totally sure what that means, but we'll try to dive into that in a second. And then some European market participants polled by CNBC doubted triple-digit oil prices are sustainable in the long term, with some pointing to potential demand destruction. A lot of this article goes over just the rise in oil prices. Looks like it's hit around $96, so it's getting up there. If we scroll down, then we can see a little chart here. It's actually a thumbnail for a video, but it shows the increase in oil prices over the last couple of months. It looks like since July, prices have gone up from about $70 per barrel to that $96 point that it's at right now. Um, there's a lot of talk here about how if prices continue to increase, then there could be some backlash um, and a steep decline in demand. It would seem that this price increase is due to some supply cuts from producers of heavyweight crude oil across the globe. The White House has said that they're trying to negotiate for an increase in supply, therefore decreasing prices of crude oil. But in the past, they haven't been too successful, so not sure if that's going to make a huge deal here in the coming months and year. So I guess we'll just have to wait and see what actually happens, especially coming up on the holidays of Thanksgiving and Christmas. Uh, Demand for gasoline here in the States, refined oil, is not going to drop too much here in the next couple of months, but possibly in the future that could change. Last article we're going to go over here is this one titled Gold Price Today Rebounds, yet still might go negative in 2023. These factors may weigh further. So let's take a look here at what they're talking about and why these gold prices may be falling and why it might not be the best investment right now. So to get some specifics on where gold's at, it looks like it has hit a low of 1,826.20 per troy ounce. I'm not positive what that measurement is, but it's how they measure the cost of gold right now. And it's slipped down 11% over the last 52 weeks. Looks like it did rebound 0.7%, went up a little bit, but not a ton. And there's still doubts as to whether or not it's going to just keep going down after that. If we look at this graph here, we can kind of see the trend over the last handful of months since March. It's kind of had a up and down. It's been fairly stable, but as we can see here at the end, it is in a downward trend right now. Not sure how far down it will go, but only time will tell. Another comment here in the article, which I found interesting, was this one, which in summary says the Federal Reserve Bank did some research that found that when real interest rates are high, then people typically don't want to invest in something that's not going to provide dividends on their money, and gold does not do that. So that might be an indicator that the price of gold might keep going down if people aren't investing in it. Another thing to look at in this article is this chart that shows gold stocks. I'm not super familiar with gold stocks, but one thing that does stick out to me is the percent off high. This is where it is compared to its highest value. And these numbers are pretty negative, in my opinion. Of course, it's always going to be negative if it's compared to their high value, but numbers like 40% lower than their high, a lot of them are in that 30-ish% range. It's not looking great at the moment. The last thing that I noticed that I kind of found interesting as they talked about gold prices and what affects them is this bit here that talks about the effect that inflation typically has on gold. As prices of goods and services increase with inflation, people typically use gold as a way to hedge their money and their wealth against that inflation, as it doesn't vary as much. Um, but it does mention that inflation did peak summer of 2022 and has been going down since, which may be an indicator that people aren't going to be investing as much in gold. Therefore, those prices will continue to drop. That's all we're going to be going over for today, but there's a lot more information in these articles about stocks, oil, and gold. And so I'll leave the link to those articles in the description. If you guys enjoyed this video, found it useful, then please hit that like and subscribe button for more. I'll be trying to do this weekly, so I hope to see you guys next time.